Hey everybody, this is Jim at SP500chart.com using time-honored techniques to understand modern markets, featuring daily technical analysis videos of the S&P 500 index. Before we get started, just want to remind you that the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research, and you have to make investment decisions that are suitable for your personal financial situation. Even if I knew what your personal financial situation is, I'm still not a licensed financial professional. I'm just a guy who draws lines on charts, and I really don't pretend to be anything other than that. But let's take a look. Okay, we are going to start off with a 30-minute chart that goes back all the way through the first week of February. And what I want us to look at is just kind of the general shape of what's been going on here. And I tell you, the markets are kind of tough to read right now, and I'll tell you why. Because we don't have, and I've said this over the past week or so, we really no longer have a pattern that we can relate to anywhere in the chart that says we have a target, either up or down. It just doesn't exist right now. It will, but for now it doesn't. And of course, I'm using what I would call good old-fashioned technical analysis chart reading. And guys, I feel kind of badly that I can't tell you that the markets are poised for a 40% gain or a 50% sell-off. Not percent, but a 50-point sell-off or a 40-point gain. I just can't say that because I do not know. As we look at the markets right now, however, there's one thing that is for sure, and that is for the past 2.5 or even close to 3 weeks, the markets have pretty much gone sideways. We've held right around this 1400 level for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 sessions now, and this is looking to me like it is that kind of sideways volatility that we get when the markets are trying to make up the mind. Do we press higher, or have we done it for a bit, and are we going to come back and sell off some? And folks, I've been saying it for I've been like a broken record. I think the S&P needs to sell off a bit. If this market is going to continue to reach new highs and get up to those 1500 levels, 1570, even as high as 1600, if we use a trend, excuse me, if we use a trend line drawn across the 2007 and 2011 highs, and that trend line, is a target, maybe not based upon anything that's underneath us, but just based upon the general idea that why would the S&P come from 666 all the way to 1408 and not make a run at something close to those highs in the 1500s. So I tend to think that just on general principle, that is a likely event. And if we get there, there's some serious considerations that have to be made. But anyway, it looks for now that that little apex of the somewhat pretty clearly violated rising wedge. You see that we spent more than 7 days underneath this wedge, and we got back up to it, popped up over it just a bit. It broke down again. Then we came right up to that apex level, and that's where the selling started this past week. Once we reached that apex level on Monday, late Monday, and early Tuesday. So right now, this may be a topping pattern that we're seeing develop. Now, I need to remind everybody that even though you might have a left shoulder, a head, and a possible right shoulder, I need to remind you, it is not a head and shoulders pattern until it is confirmed with a breakdown of the neckline. So this is what I'm going to do right now. This could be a diamond pattern in formation. Okay? And we've seen these before. They have sometimes led to consolidation and new upwards moves, but they have also led to breakdowns. And they typically are a reversal pattern, but we cannot make any such call until we see the pattern and until we get confirmation. And look, guys, here's the good news. The good news is that this pattern is not extremely tall. Okay? It's about, from the top here at 1419, let's call it, and the bottom at 1380, let's call it 1389. We're just going to kind of round this off. We're talking about a 30-point height to this pattern, which means if it breaks down, then we probably would only expect a move from wherever it breaks down of about 30 points. And guys, that would fit in pretty nicely with some of the things we've been expecting. But there's a couple things I want to point out, which I'll talk about in just a second. But you can see that we have this little flattened out trend line at the top here. You can see where we were going more aggressively. For a while we were at this pitch back here, at this red line. You could see for a while we were really, hold on, let me fix my chart. Okay, for a while the market was proceeding at this pitch. Then we kind of entered into this wedge pattern here, okay? And now it looks like the last two peaks have been at an even less aggressive pitch, which tells me this could be a rounding over. But we will know for sure if we start seeing a breakdown of this line right here. Now you can notice that I've pointed out various lines all along saying for a while that this red line right here. At one point I said, well, actually at one point we were looking at a breakdown of this green line of the wedge as the first shot across the bow, but the market quickly recovered, and then we established this as kind of a potential sell trigger once that breaks. But again, the market came back and got up over the level of where that broke down. But this area right here is where we see that apex. And I just kind of think that that's going to tell us something, and I think it already has. So what do we do now? Well, we look for a possible back test again at this purple line. And if that were to happen early on and then we sell back down, then we could be looking at a little bit more evidence that this is a top pattern. And what we want to start seeing before we identify this as a top is, instead of a line with an ascent to it over a couple of peaks, we want to start seeing a line that is declining. So now the resistance level is not rising anymore. The resistance level is turned over. And, just for the heck of it, we'll put this here. But I'm not sold, guys, that the highs on Friday are the short-term highs. Okay? I don't think we can say that. They could be on up here. Could even be parallel. We just don't know yet. But at the risk of making a charting error, this is what I'm going to do. I'm going to make this very, very light colored, almost like a little ghost thing, just to kind of keep an eye on. So that's what I'm seeing right now. Now, how did we do for the week? Well, let's look at the week on a 5-minute chart. And I will tell you that, again, I was somewhat surprised by the strength that we started out with that gap up on Monday. But when we reached this apex level here, I said, I suspect that we should find some resistance in this area, and at least for the next 2 days, 3 days, that area has shown as an area of resistance. Now, can the market overcome that? Well, yeah, possibly. As far as this actual, what's a good way to put it? Yes, the market can do whatever it wants to do. But I sort of suspect at this point that our line up here, this purple line, would serve as resistance should the market plow on up here, and at which point I would expect it to turn back down. This sort of has a little bit of an inverse head and shoulders look to it, but I'm not so sold on that idea. We did have a small inverted head and shoulders on the 29th, but I'm not necessarily sold on the idea that this could be a larger inverse head and shoulders pattern. If it is, we will mark it. How will we know it's an inverse head and shoulders pattern? Oh, everyone in unison. If the neckline gets taken out, okay? If the market were to rally up above this, let me make this line extremely precise. If the S&P were to rally and get up above this line, then that would be a signal that we're going to go up and we're going to set another high. If, on the other hand, we come back down and we get under 1400 again and even break this line right here at about 1395, then we're looking at this whole thing possibly, we could even bring this line to back here, this whole thing possibly being something of a head and shoulders top. So isn't that interesting? We're just kind of in that middle ground right now where we're not sure which way it's going to go. We don't have a pattern that we can point to yet that is a confirmed pattern. And guys, what does it take? In this case, it just takes a little patience. So I would advise you to watch this closely. If this line breaks right here, then then the market will be selling off probably to the 1360, 1370 area. If this line gets taken out right here, then this whole thing could end up being something of a consolidation that's going to take us up to the 1430s or even higher. So that is my video for March 30th, 2012. I appreciate you taking time out of your day to watch it. Thank you for taking time out of your day to watch the video. And if you're a subscriber at sp500chart.com, I want to thank you. I hope you get something out of these videos. I've got a lot of good reports. People saying, man, this has just kind of opened up a whole new way of looking at things. And so I hope everyone is getting something out of it. Now, if you are not a subscriber, I just want to encourage you to consider it because it's not very expensive, $19.95 a month or $189.95 a year. I'm not going to be keeping that year thing going too much longer. So if you're thinking about it and you want to get a discounted rate, that's the way to do it. And all subscriptions start with a $4.95 2-week trial. And I think since I've been doing this, I've had maybe 2 people who did the $4.95 trial, then said, I've seen enough. That's great. So that's a very, very small percentage of the people who've signed on. So just think about it. And look, it's less than a cheap cup of coffee per day. Take care, and there'll be more videos this week.